Hello everyone. In the last week ahead video as well as in one of the last week pre-market video, I analyzed the open interest beyond support and resistance. Like FII were more inclined towards the buying side and whereas retail traders were more inclined towards the selling side kind of. Then on those two videos, I got lot of comments asking me to make a detailed video about it. So here we go. Here I'm not going to discuss what is the definition of open interest and how it differs from volume etc. since I'm guessing most of our channel viewers are already aware of it. So in this video, we are going to discuss how to utilize the open interest data beyond basics and beyond support and resistance. Let's get started. Usually for analyzing the stock or index, I will go for TradingView or Money Control or to Screener.in. But for open interest analysis, the best website is NSE India. So once in the nseindia.com website, in the search bar, search OI spurts, which will give the list of results. And in that, select the OI spurts under market snapshot, which will then open the spurts in open interest tab. And then if we select the downward arrow mark near the underlying, we will then get the list of 4 possible scenarios of stock or index that happened in that particular day. 1. Rise in open interest and rise in price. 2. Rise in open interest and slide in price. And then slide in open interest and slide in price. And finally, slide in open interest and rise in price. You might ask me, what do all these mean? These are the fundamentals in the open interest analysis beyond support and resistance. First one, increase in open interest and the increase of that particular stock or index is an indication of long position build-up. This is the overall. Let's say if the Nifty price is increased and the number of open interest also increased means overall it's an indication of long build-up. Now coming back to NSE India website, in the spurts of open interest tab, if we select the rise in open interest and rise in price, that will give us all the list of stock or index which had long positions. Similarly, second, an increase in open interest along with a fall in price point is an indication of short build-up. Then third, a decrease in open interest with a price decrease which indicates the long unwinding. And finally, a decrease in open interest along with a price increase is an indication of short covering. This is how all the news channels say, like Reliance had a short covering or even Nifty had a short covering, etc. Basically, what they mean is there was a decrease in Nifty open interest and also decrease of Nifty price. So in simple one sentence, they will tell Nifty had a short covering. I hope everyone can follow me. Long position build-up, short position build-up, long unwinding and short covering. These were the 4 basic quadrant or the scenarios in the open interest analysis. Please remember those and by selecting those respective underlying in spurts of open interest tab, we can see those list of respective stock or index. Anyway, now let's do further analysis. Again, back in NSE India website, please search daily market report and select the daily market report in the drop down list, which will then take us to the all report tab. Then in that, select the derivative section, which will give us lot of Excels to download. Then out of those, we have to download F&O participant wise open interest. Basically, that will give us who FII, DAI retail people, who got how much open interest, all those details. Then in the archive section, for whichever the historical date we want, we can download that respective day open interest data. For example, I downloaded the last Friday, 14th June and 7th June F&O participant wise open interest data. If we open this, as I said, we will get all this information like how much index position, who is long, who is short, in which index or individual stock, etc. All those details. Here I made an Excel. I will attach the link in the description as well as in the pinned comment. If you want, you can download and use it. Let's see an example. Here, option index call long means call option buyers and option index call short means call option sellers. The top row is client, which is nothing but the retail people. As we see here, 51 lakh and 51,000 call options were bought by retail people, whereas near 55 lakh call option was sold by retail people. So if we calculate the percentage, 48% retail people were call option buyers, near 52% retail people were call option sellers. Hence, retail people got 4% more number of call option sellers than that of buyers. So, in short, retail people more sellers. Similarly, if you see the FII, near 57% they bought the call option and only 43% they sold the call option. And if we do the same for put option, we get this table. Retail people sold more call option and sold more put option, meaning they expect the range bound market, then only they have this kind of open interest. Whereas FII bought more call option and bought more put option. So FII mentality is they're hedging and expecting the breakout on either side, can be on the upside, maybe on the downside. Then finally, professional traders, more numbers were call option buyers and more numbers were put option sellers. This means they're expecting index to go only in the upside. I know it's a lot of logic here. Hope I'm not confusing and everyone can follow me. This is how we can understand what mentality each group is trading. I mean, in today's market, the values of open interest breakdown are very close to 50%. So the mentality of each group is crude, not definite. But there are periods like where FIA holds 80% short position and only 20% long position kind of. Those kind of holding open interest will give us much more definite understanding. Then by comparing the total number of open interest change with that particular day, we can understand further. For example, here I compared 14th June open interest with a week ago 7th June open interest. The number of call option open interest contract decreased by 5% and the number of put option open interest contract increased by 11%. So from the options data, what it's conveying is from the option seller's perspective, they expect market to go higher. Whereas from the buyer's perspective, they are hedging their position just in case if the market falls means. I mean, generally for this open interest analysis, analyst considers from the buyer's perspective, but for the quantity of options that trade in India, I don't want to draw the conclusion, so I will leave the decision with the viewers. Basically, option sellers thought that the market will go up last week, whereas option buyers afraid that market might go down. That's it. This is one of the few ways we can analyze the open interest data. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.